Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY for May 1st, 2025, also the data sets and earnings. But with that said, let's go ahead and jump straight into the earnings. Hopefully my screen's there. Okay. So I'm going to actually go back and go over what happened today, Wednesday, uh, April 30th. So we had the GDP come in lower, which that was the original reason why we had the massive pull down in the pre-market. The primary GDP was what came in negative, and for most people that was extremely bearish. That was, just a massive reason to pull the market down. We had the PMI for Chicago come in slightly lower. That wasn't what pulled the market back up. We had the PCE start coming in, and a lot of these reports were a lot cooler. This one right here, the month over month for the core PCE came in at 0%, which was very good. It says it's worse than expected in the data set. However, we want this to come in lower currently. Um, that actually helps the market right now rather than it coming in higher. Um, Other than that, let's see. Pending home sales went up a ton. Personal spending went up a little bit. So maybe the market's seeing that the consumers aren't entirely destroyed right now. Sorry, I had a really busy day. I've had a really long few days. I know I say that almost in every video, but just bear with me, please. I'm going over this data kind of the same time you are, so um, so yeah, that explains why we saw the pre-market got bearish data, and then we got essentially, you know, neutral slash bullish data, which that's why we started pulling up to, um, above the 550 and beyond. Now let's go over what we're going to see tomorrow. Now, tomorrow we have the jobless claims at 8:30. Again, this isn't something I expect to really push the market one way or another unless we see something absurdly outside of the forecast range. If we see the jobless claims skyrocket or heavily decrease, then that's a signal to um, something impending. Uh, at 9:45, we have the manufacturing PMI. That one I generally don't get a whole lot out of, but it can move the market if granted. Kind of the same thing like the jobless claims if it comes in, outside of the forecast range. Then we have the ISM manufacturing data at 10 a.m., so just 15 minutes after the uh, manufacturing PMI data. Again, this usually isn't going to do a whole lot, but due to the narrative right now, some of this manufacturing PMI data might be useful. We will see come 10 a.m. tomorrow, but very likely this isn't going to be what moves the market very much. We have the Atlanta Fed quarter two GDP at 1 p.m. Usually that doesn't move the market a whole lot unless, again, it's outside of the forecast extremely heavily. But the data sets for the day aren't super impressive or significant for the market, um, unless we get some reading that's just overly concerning in one way or another. Now, let's go to the earnings, and the screen's gonna look wonky for a second. I apologize. Okay, that's better. So let's see, we had Microsoft and Meta today, and Qualcomm, and they all had double beats. I didn't hear the guidance, but just looking at the overnight prices, I'm assuming their guidance was pretty good. So, that's gonna push tech pretty hard right now, and we'll go over that in the actual technical analysis part, but that's going to really carry the weight for the day tomorrow is these earnings. And I mentioned that in the few videos earlier in the week. And I apologize for not recording a video. Yesterday I went out for the night, but um Yeah, we should be seeing a lot of the momentum being carried into the price action tomorrow, or the trading session, one way or another. Um, yeah, since people are gonna want to get in on the euphoria of those earnings being massive beats. Now, we do have Ellie Lilly in the pre-market. I know some people are looking forward to that. I'm not going to be able to play it this time. I didn't have a chance to set up contracts for that for today. After close, super important earnings. We have Amazon and Apple. Uh, there's a lot of expectations riding on Amazon right now, because there's been some concerns with trucking companies and trucking just delivery carriers in general right now. And personally, I'm really interested to see how Amazon's earnings are going to be performing due to that. I heard from 8 of my trucker friends today that today alone the contracts decreased, um for what the centers or the transportation centers were offering. So take that for whatever it means. Um, but that's not something standard. So that's kind of concerning to me. Uh, yeah, just something to start paying attention to is that transportation is kind of starting to go downhill quite a bit. Amazon's going to be a really nice indicator of that because Amazon has a ton of carriers. They have a ton of transportation from their own transportation routes, and then they use other companies as well. So it'll be interesting to see their earnings, primarily due to that. Now, Apple, I'm not gonna really weigh in on Apple. It's a huge tech. I don't really have any say whether it's gonna go up or down. I don't really mind too much one way or another. Now, Master, again, I don't really care. Master is pretty much a leverage pyramid scheme, so one day it'll crash, but that won't be for a while. But yeah, that's the earnings. Tomorrow, the after hours are going to be very busy, so just be prepared for that for Friday. Friday, we just have a bunch of oil companies. I'm not really looking for that one way or another. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, let's go ahead and open the daily time frame and the moving averages and the Bollinger Bands. And quickly going over the levels. So we closed at the 554.54, which it's really annoying a number for some reason for me, but yeah, 554.54. The 5 mile is at 551.41. So that means it's going to be pulling up between where the 5 mile is right now and where that close price is. Very likely very high because of how high the market actually went and how high it is right now. Even though the moving average isn't moving in the current moment, it technically still is being um, calculated. So the price action right now, so right now the overnight price is at 560. That is helping pull the 5 mile up. So on open, it's very likely we're going to see the 5 mile almost exactly where the closing price was. Um, if around probably the 552, 553 mark at the lowest, absolute lowest. I wouldn't be surprised if it's at 554, just due to how bullish the market is right now. With that said, the 10 mile is significantly below us right now. It's at 538.57. The 20 mile is at 533.84. So, as I mentioned, we're starting to get in a very bullish posture for these moving averages. The 5 mile short term is above the 10 mile, the 10 mile is above the 20 mile, and it's all starting to lean upward towards the 50 mile and the 200 mile. Now, the 200 mile is at 570.08, and as you can see, the upper Bollinger is pretty much sitting on top of it, and that is currently at 570.91. So that's a very good target. That 570 range is a massive target. What else do I got in my notes? Let me see. The ADL. Okay, yeah, that's right. So the ADL. Definitely want to go over this because this is really important right now. If you can see the ADL, it is literally at all-time highs right now, and we are not at all-time highs. This is what you would call a divergence, and this is a super bullish divergence actually, but uh, that means something. That's a lot of money going into these few candles right here. Uh, yeah, we'll see where that goes from there, but that's something to pay attention to. That's a super strong indicator that the market is absolutely dumping money into the S&P right now. Now, let's kind of tie everything together, and I'm going to do this fairly quickly because I'm starting to get extremely drowsy, and I apologize, everybody. But I want to take a step back first and actually discuss what happened today. So, today's price action, okay, and remember where the 5 mile was. The 5 mile, let's go ahead and bring up the drawings for a second. So I don't have the exact 5 mile, but it's basically right in that range. Okay, circle, that didn't work. Let me try to draw another circle. So it was basically in that range. Okay, and you could see this area being actively tested throughout the day. We opened right at the 553 and essentially just dumped. So, what happened in this range? If you can kind of see right here, and I'm actually going to circle this just a little better. So, this is the 5 mile range. Okay, and that's kind of the upper bounds and the lower bounds together. And no, it's not perfect. This isn't drawn perfect at all. So you just have to be a little creative here. But essentially, that's where the 5 mile was. So this area above it is really key, and this area below it is really key. Okay, these are testing areas. Okay, since the 5 mile was right here, this was just liquidity to test this, and above here was just liquidity to test this. So, and we saw that throughout the day, multiple, or happened multiple times. The upward liquidity was tested right in there, and tested right in there. Bottom liquidity tested throughout majority of the session. And yes, I know that does look like a face, but as you can see, the liquidity was tested really well. So this was a huge 5 mile test, and the 5 mile test was essentially rejected, and that means for a bullish rejection, that's kind of like ping-ponging off of the 5 mile and heading upward. That's kind of what the whole price action of today looks like. We tested the level, went through it, had the upper bounds, lower bounds, went through the level, and succeeded through the test. Well, rejected the test. If we succeeded the test, we would have actually headed downward. Because the 5 mile is underneath us, and while it's underneath us, we will bounce off of it, which means we are rejecting the level. And as long as we're rejecting the 5 mile, that's a really important signal. That's telling you that it's support that's underneath you that's being actively used to push the price upward. That's a really important thing when deciding if you're going to be bullish or not, because that's giving you pretty much a green flag that things are very bullish right now. The buying is essentially pushing upward. Well, what's a really key level to push upward into? Um, right at that 570, and we're not far from it at all. Uh, Technically, with the overnight price action, we're a little less than $9 away right now, which that can absolutely be claimed tomorrow. So we do have to look for that. Okay, we had this large cup and handle. It broke out. We were in a fairly bearish chop zone right here, but We tested the downside. Excuse me, I'm losing my voice. Tested the downside, rejected it, whether it was the data sets, whatever, but it was enough to convince people to start buying and to essentially cancel out this inverse cup that was forming. We had two outcomes really building here, and it was the inverse cup or it was the breakout of the cup and handle. We had the cup form, and while this is a super extended handle, it is a handle, and it led to the breakout. So, where do we go from here? Okay, we have two targets we need to look at, and since we finished the 5 mile test, we bounced off the 5 mile. There's basically two levels we're looking at, and that's either the 20 mile, which again, that's at the 533, so that's miles away right now. That's not happening unless we get some super bad data. That would turn into something like that. Okay. Really don't anticipate that yet. What I'd more so expect is some sort of head and shoulders to form when we test the upper Bollinger. And that's where our target is, the upper Bollinger and the 200 mile. Very likely we'll head to that area and reject. So just be prepared for that. All of our support pretty much is underneath us. And even though the 5 mile is starting to get pulled up towards the market price, it's still going to be far away from that 570 range. And if we do start engaging the upper Bollinger, that's going to be pulling the upper Bollinger upward as well. So as we start trading, we're going to be trading the upper Bollinger as trading the price action upward into the upper Bollinger is what I'm trying to say. So it's very likely we'd push all the way to like 572, 573, potentially even 575. Um, that's quite a ways away from the 5 mile right now, when the 5 mile is going to be essentially in this area, give or take. So just keep that in mind. There's a lot of support that needs to be retested underneath us before we really start, um, hammering away against this 200 mile. It's very likely that we see something where we, again, test that level, reject it, come back, retest liquidity in here. And when we retest liquidity in here, very likely by then, the 20 mile will be, I don't want a line, I want to draw a circle, will be in this area, which means that the market can actively um, essentially come up, reject the 200 mile, retest the 5 mile, wherever that's going to be, retest the 20 mile, and from there, um, build more structure out, whether this builds a head and shoulders downward or some sort of cup leaning upward at that point, you know, something like that. Anyway, I'm gonna end the video here because I am literally starting to fall asleep. Uh, I hope everyone played straddles on the 5 mile test like we mentioned, taking longer calls on the lower bounds of the 5 mile and taking puts on the upper bounds of the 5 mile. With that said, again, we're targeting the upper Bollinger and the 200 mile right now. Very likely for a rejection. If we don't head upward, then we need to just focus on the nearest support, which is going to be the 5 mile. And again, that's going to be anywhere from the 520, 552 to the 554-ish, give or take. So technically the upper bounds is going to be in the 556-ish range, which is, extremely reasonable for us to test tomorrow. So look for that. Yeah, I'm going to end the video there. I hope everyone has a safe day tomorrow. Trade safe and have a great day, and I will talk to you in tomorrow's video. Have a good night.